Hey, good morning, everyone. Thank you for being with us today. My name is Ann Meredith, and I'm thrilled to be your moderator for this webinar hosted by UPS Supply Chain Solutions. We've got an exciting session lined up for you today, packed with insights regarding the latest developments in Canadian trade compliance. Our goal today is for you to gain valuable insights into how these regulatory updates could affect your supply chain and learn some actionable strategies to assess and mitigate new tariffs. But before we begin, I have a few admin updates to share. This webinar is being recorded and will be made available to everybody who registered. We encourage participation and would like to ensure we answer your questions, so please make sure you use the Q&A function at the bottom of your screen. Questions a lot of times get lost in the chat, so we really encourage utilizing the Q&A function for all questions. We'll try our best to answer your questions live on the call, or if necessary, we can contact you privately after the call. Also, after the webinar has finished, please watch for a post-webinar survey to appear. If you could fill that in, we appreciate any and all feedback. And now, for legal purposes, I will read the following statement verbatim. At the date of this publication, policies are evolving. This presentation is for informational purposes only. It does not constitute legal advice. Please consult with your own legal counsel for such advice. Do not rely on this information without performing your own research. All right, with that, let's start by introducing our distinguished speakers who bring a wealth of experience and insights to today's webinar. As mentioned, my name is Ann Meredith, and I'm Senior Marketing Analyst for UPS Supply Chain Solutions. We have Penny Moulton, Director of Trade Management Services and Trade Compliance, UPS Canada, and Carolyn Kim, Vice President of Corporate Affairs, UPS Canada. Thank you both for being here with us today. Okay, before we dive into today's discussion, let's take a quick look at our agenda. We'll begin by exploring the latest tariff changes and trade impact, followed by a few action steps to assess and mitigate these new tariffs. We will provide clarity on your reporting obligations under the Proceeds of Crime and Terrorist Financing Act. We will also discuss forced labor regulations, including essential compliance requirements and practical tips ahead of the May 31st deadline. And lastly, we'll have a detailed overview of the upcoming May 20th deadline for mandatory financial security under CARM. So with that, we have a lot to cover. I'll go ahead and turn it over to Carolyn to get us started.
Thank you, Anne, and good morning, everyone. Now, the trade environment is facing significant disruption. We know with the new US tariffs on Canada and many countries around the world, this is putting downward pressure for businesses to act. Next slide, please. Thanks. The magnitude of impact depends on a variety of factors. It depends on the sector, commodity, and country in which you are exporting and importing. And the policy landscape will continue to evolve in the coming months and years as the US, Canada, Mexico trade agreement is formally being reviewed in 2026. But given the disruption, we know that there are a lot of questions on how discussions will form over the next couple of weeks and months, and how it will be shaped in the long-term future. In addition to all of the tariff changes, we know that there is also a very complex customs policy framework today, and this is also changing, especially in response to the Canada-US northern border that aim to respond to border security concerns. So if you are a shipper, this is also something that you need to consider as well. But UPS is here and ready to help customers and businesses of all sizes to understand new business risks and understand the opportunities to grow under these new conditions. Next slide, please. When it comes to the US trade remedy actions, let's start with some background. When it comes to Congress, they have the power of the purse. And what that means is that they are responsible for determining how to spend money and how to generate federal funds. And over the years, since the 1930s, Congress has been delegating certain authorities to the office of the president. There are certain circumstances, very specific scenarios in which the president may impose tariffs. So we know that President Trump used the International Emergencies Economics Powers Act, also known as IEEPA, to impose tariffs based on the rationale of a national emergency involving threats of security, foreign policy, or the economy. Section 232 may also be called upon when reliance on certain imported goods pose risks to national security, like steel and aluminum, which is used in U.S. infrastructure and the military. So let's get into the specifics of the tariffs imposed by the U.S. that impact Canada. Firstly, the IEEPA tariffs. Back in February, the U.S. administration applied a 25% IEEPA tariff on most goods, including a 10% tariff on energy-related goods. Now, this policy tool was used by U.S. President Trump under the rationale of a national emergency relating to fentanyl and illegal immigration. After a 30-day reprieve, IEEPA was reinstated in early March, and as of March 7th, goods that qualified under the Canada-US-Mexico trade agreement were exempted. When it comes to the Section 232 tariff, that was applied on March the 12th when it was introduced to the steel and aluminum products and its derivatives, which were previously exempt since 2018. Now, this same policy tool applied to automotives, and that included passenger vehicles, light trucks, and cargo vans. All of those were subject to 25% Section 232 tariffs as of April 3rd. Now, quickly following on the heels of that, on May 3rd, this tariff applied to certain auto parts, including engines and engine parts, transmissions and powertrain parts, as well as electrical parts. Now, for a period of time, goods entering the U.S. with the benefit of CUSMA are exempt, but this will change and will eventually transition to paying the tariff on non-U.S. content, even if entered under CUSMA. An important note on the Section 232 tariffs. In April, there was an announcement which clarified that the Section 232 tariffs on steel and aluminum and on autos would not be stackable against the IEEPA fentanyl tariffs. So that's an important note to make on this policy tool. Moving forward, the final tariff we need to discuss is the second round of IEEPA tariffs. Now, this is also being referred to as reciprocal tariffs. Now, when we saw all countries, most countries being affected by reciprocal tariffs, Canada and Mexico were exempt. These countries were subject to a 10% reciprocal tariff. When it comes to Canada and Mexico, they are exempt as long as the first round of IEEPA fentanyl tariffs remain. And after that, Canada and Mexico will move to a 12% reciprocal tariff. Now, the date of when this will apply has yet to be determined, but in this situation, this tariff rate would replace the IEEPA fentanyl tariffs. And secondly, if the imported commodity is subject to Section 232 tariffs, they would be exempt from the reciprocal tariffs. Moving on to the right-hand side of the slide on Canadian countermeasures, we know that the Canadian government introduced surtaxes through orders in council that apply to U.S. origin goods. Now, this also applies to those imported for commercial and personal purposes, even when exported from a country other than the U.S. Back in March, in the beginning of March, we saw Canada impose a 25% surtax on $30 billion worth of American goods. This applied to a range of products, including orange juice, peanut butter, wine, spirits, beer, coffee, appliances, apparel, footwear, motorcycles, cosmetics, and certain pulp and paper products. The federal government also launched a public consultation process in which they consulted on another $110 billion worth of U.S. goods for a potential phase 2 surtax. And that included products such as EVs, fruits and vegetables, beef, pork, dairy, electronics, trucks, and buses. Although a broad-based phase 2 surtax has not been applied, Canada did retaliate on the U.S. imposition of tariffs for steel and aluminum, as well as autos. And so on March the 13th, Canada imposed a 25% surtax on $29.8 billion worth of American goods, including steel US steel products. It also included aluminum products and other US goods valued at 14.2 billion. In addition to that, Canada imposed a 25% surtax on vehicles imported from the US that are not compliant with CUSMA. So this is what's in place today, but I want to talk a little bit about what's coming around the corner. The US Department of Commerce's Bureau of Industry and Security is investigating the effects on the national security of imports of pharmaceuticals as well as imports of semiconductors. Now, when it comes to the investigation of pharmaceuticals, the scope includes pharmaceuticals, pharma ingredients, including finished drug products, medical countermeasures, critical inputs such as active pharmaceutical ingredients, and key starting materials and derivatives of those items. So quite extensive. Now, when it comes to the scope of investigation of semiconductors, that includes semiconductor manufacturing equipment and derivative products. Derivative products include downstream products that contain semiconductors, such as those that make up the electronics supply chain. Public comments were accepted on both studies. The submission deadline was May the 7th, and the department will consider and respond to public comments as it conducts its investigation. So more information to come on that. We won't be able to share more until those details have been released. So now that we provided an overview of what policies have been enacted and what's coming around the corner, I'm going to turn it over to Penny, and who is going to touch on the strategies that you can use to help minimize the impact. Over to you, Penny.
Great. Thanks, Carolyn. Good morning, good afternoon, good evening, everyone. Thank you for joining. Certainly, Carolyn had a lot of good information to give in the context of what transpired in regards to the surtax. The trade environment continues to face disruption. Some companies who didn't understand previously now realize what trade compliance is and how it can impact your business. So we're going to review action steps to assess and navigate new tariffs. So assess the impact of the change tariff, leverage free trade agreements, including CUSMA, investigate Canada duty relief and duty drawback programs, which we are going to talk about further in the presentation, validate the product origin, valuation in HS, and understand the federal government remission program. So we are going to talk through all of the items listed there. But those of you who are importing goods into Canada, which are US origin, and the surtax applies to your goods, you may not have thought a lot about the duties applicable on your shipments. Taking advantage of CUSMA could help you reduce or remove the duties applicable. However, the surtax will still be applicable. I will walk through an example of how the surtax is calculated. When calculating duty, taxes, SEMA duty, and surtax, the calculation is always completed on the value for duty, which is the Canadian value. In this example, the value for duty is always, like I said, the Canadian value of an imported good and subject to a surtax, which is, in this example, $150. Let's say the imported good had 5% duty and is subject to anti-dumping duties of $34, and the applicable surtax is 25%, as per the schedule to the United States surtax order. So the surtax, it's 25% off the $150, and then you would take the duty amount, which would be off the value for duty of $150, would come to $7.50. And then you would take the surtax payable, which is the $37.50, add the customs duty, and then add the anti-dumping duty and you get a value for tax of $229. And then the GST is then taken off of that. So you can see how it can be calculated from a surtax standpoint. So some of the just to understand how the impact could be on your products, know your products, validate the information, and talk to your suppliers. Just make sure that you are aware of the impact of the tariffs changes could be to your business. So leveraging the Canada Free Trade Agreements, what does it mean to qualify for a free trade agreement? So making sure in Canada for shipments from the US, CUSMA can still be applied if applicable. Now, this is for shipments coming into Canada. However, if your tariff classification codes are applicable to surtax, then the surtax will still be applicable. Canada has free trade agreements with many countries. The origin requirements are different than CUSMA in some cases. So if you're going to use another free trade agreement, make sure you understand the specific origin requirements and the need to have a certificate of origin if it's required. So as you can see, Canada has agreements with many countries, and there is the Canada-European Union Comprehensive Economic Trade Agreement, CETA, and that's being used by a lot of importers. The Canada-Chile Free Trade Agreement. So just understanding what agreements are available and also making sure if you are going to use them that you are meeting the specific origin requirements, because they're not all the same as CUSMA from an origin requirement standpoint. So from a duty relief and a duty drawback standpoint, so duty relief is the duty is payable on the imports, and the goods are no duty is payable, sorry, on the imports. And then once the goods are exported, you don't have to pay the duty. There are some conditions that the goods are used for export within 4 years from the time they enter Canada. And in most cases, goods must be exported within 4 years, as I said. From a duty drawback standpoint, just making sure that it can be a refund of customs duties, anti-dumping and countervailing duty, or excise taxes other than the GST. The GST would be claimed on your input tax credit. So some of the conditions for a duty drawback, the goods are imported into Canada, have been used for one of the sole following purposes, for display or demonstration, example trade shows, for further processing before exporting, and for development or production of the goods before the subsequent export. So CUSMA does limit the amount of duties claimable for certain goods, which is the lesser of the two duties concept. So essentially what this means that exported goods are affected by the limitations, drawback, or relief of customs duties cannot exceed the lesser of the total amount of customs duties paid or owed on the goods imported into Canada, and the total amount of customs duties on the exported goods in the CUSMA country where the goods were imported. So to determine the amount of customs duties deferred under the duties relief program, companies must establish two duty amounts, which are the amount of the customs duties paid or owed on the imported goods entering Canada, the amount of the customs duties paid on the goods entering the other CUSMA country. So the duties paid on the goods entering the other CUSMA country must be determined from that country. And the customs documentation has to be converted to Canadian dollars. So now that CARM is live, all the duty drawbacks have to be submitted in CARM and a spreadsheet completed with all of the fields completed according to the heading. So if you need some help with that, we can certainly help you through that. But many companies are looking at other ways to mitigate. The surtaxes are still going to be there, but if you've been paying duties and you have an opportunity to get do a duty drawback, that certainly can be beneficial to your company. So validate the product origin, valuation, and HS. The same as CBSA verifications. So CBSA refer to audits as verifications, and it's important you ensure that the country of origin is correct. The country of origin does not necessarily mean the location where the goods were shipped from. For example, goods from China imported into the US and then re-exported to the US, from the US to Canada, the origin remains at China. Obviously, if there's a lot of work being done and maybe according to the CUSMA agreement, that could change, but essentially that's what it's meaning from an origin standpoint. So from a transaction value or a valuation standpoint, most shipments coming into Canada use the transaction value, for which CBSA looks at the total value, which means they not only include the price of the goods, but also any additional costs or deductions. As the shipper or importer into Canada, ensure that the value is correct and any additions or deductions are taken into account. For example, if the freight to Canada is included in the value, then this amount can be deducted. Additions are added to the value for, you need to make sure that they're added in. But a good example is if, for example, you create a mold for a product that you pay for, the goods are manufactured in another country using that mold, then the value of the mold will need to be added to the value of the goods. And you can spread that value over multiple shipments, or you can pay it on one shipment. It's up to you. But in the event of a customs audit, you need to be able to prove that the duties and taxes were paid on that mold that you sent to be used. When was the last time you verified your HS tariff codes? Do you need a ruling to ensure that they are correct? It's all great to use a duty-free tariff classification, but you want to make sure that that's the correct one. Certainly we can help you apply for a ruling. But just doing that due diligence and making sure that they are correct is important. Is your database up to date with your customs broker? Every time your part numbers are being updated, including countries of origin, maybe you're sourcing from another country, you need to make sure that that information is being communicated to your customs broker. And if you're unsure about an HS tariff code, you can contact the customs broker and look at the advance ruling, like I said. CBSA will use CARM to target specific transactions for further information. So they might send you a request for further information, and that's going to be found in the CARM portal. So you can see in there where customs are going to put the details and the information, but it could be a trade advisory notice, a directed compliance letter, and a compliance validation letter. Um, and just making sure that, you're aware that they could be there. From a trade advisory notice standpoint, they're nudges and they provide the importing community with guidance to assist them when there is a potential for non-compliance. So if you receive a trade advisory notice, you actually don't have to answer it. There's no monetary assessment based on the result of a TAN, but it is important that you do respond, even though you don't have to, just to show customs, answer their questions. A directed compliance letter addresses instances of known non-compliance, and it's a letter to the importer, and it is accompanied by an AMPS penalty. And again, they will all be in CARM. And a compliance validation letter addresses instances of suspected non-compliance, and you have to provide information back to CBSA within 30 days. And just making sure that these are, like I said, in CARM. And if you see one and you need some support, you can certainly contact your customs broker to help you with that. But just understanding that they are there and they are focusing on specific transactions rather than a CBSA valuation audit or an HS or a classification audit that can go back up to 4 years. These focus on specific transactions. So if you are making mistakes, it gives you time to at least correct those in same and similar goods, but also be able to, like I said, correct them, because you don't want to go back 4 years and end up that you should have been paying 5% duty or whatever it might be. Okay, so the United States remission order, surtax remission order. I know everybody was very happy to see this, but it's remission from the surtax, and which was issued to minimize the negative effects of the surtax on Canadian companies and entities by providing relief for goods that are used in Canadian manufacturing, processing, and food and beverage packaging, and for those used to support public health, healthcare, public safety, and national security objectives. Customs have published what's called authorization codes, which your broker will use to exempt your goods from the surtax if they are applicable to your shipments. If your goods are exempt, you can send a letter on your letterhead advising of such, and then we will update your line codes to ensure that the surtax will not be charged on your shipments. CBSA will audit shipments where the surtax is removed, so it's important to have the details to support your claim of not having the surtax be applicable. Goods that were imported before October the 16th, where surtaxes were paid, we can submit a claim for refund within 2 years after the date of importation, as long as no other claim for relief of the surtax has been granted under the customs tariff. To submit a request, you're not sure if your goods would be subject to the remission order, you can submit a request. You just go to the Department of Finance website and send a request to remissions at fin.gc.ca, and that will be in the notes when you get the overview and the presentation after the session today. So the China surtax remission order, the purpose of this notice was to advise of the effective January the 31st, which would allow for relief of surtaxes paid or payable under the China surtax order 2024 in respect of eligible goods. Remission is being granted pursuant to Section 115 of the Customs Tariff. So from October 22nd, 2024 to July the 1st, 2025, corrections can be completed to get the refunds for the surtax paid. And there's certain conditions, but just, making sure if it is applicable to you, we can go get claims on the surtax that was paid already. But the goods are listed in Schedule 1, and making sure if your goods are listed there, that you can actually get your money back for the surtax that was paid. So now we're going to talk about trade-based money laundering, TBML, a new acronym for you to learn. Not that we don't have enough already, but trade-based money laundering is not new. It is the process used to disguise the source of money or assets derived from criminal activity. The illegal activity can include drug trafficking, smuggling, fraud, extortion, corruption. Criminals must launder the profits to be able to enjoy them. As we know, there's a lot of bad actors trying to figure out new ways to launder money or bring illegal goods into Canada. So some of the money laundering schemes are misrepresentative of a price or quantity. Some things, it's easy to misrepresent the price or quantity, misrepresentative of the quality or classification. So gold, for example, and then multiple invoicing, phantom shipments, which I'm going to talk about, and then misidentifying the final recipient, destruction of goods, etc., or the destination of the goods, and then misdescription on the shipping documents. So an example would be over-invoiced imports. Criminal in a foreign country buys, let's say, 10,000 razor blades at 10 cents, spends $1,000 of them on them, and then exports the razor blades to a domestic criminal at $1,000 per blade. And the domestic importer imports 10,000 razor blades, but pays the foreign counterpart $1 million. So essentially, they're able to move $1 million. And the trade price manipulation, motivation, money laundering, illegal activities, income tax avoidance, and evasion. So some of the key commodities are phones and electronics. And the reason that, you point out phones, if a phone, they say they're worth $1,000 each, but they're really only worth $200 each. It's difficult for CBSA to determine that. Some things are difficult to examine. And then variable pricing, it changes almost daily, kind of like gasoline, but precious metals and stones. So goods being imported that are undervalued or overvalued, it's difficult, as I said, to determine the price. Declaring, and sometimes CBSA are asking for additional paperwork to substantiate the value declared. And you can see why, or the description, maybe the description is vague, and this is, one of the reasons that they're asking this. So just to talk a little bit about FinTrack, it's established in Canada, and it's the Financial Transactions and Reports Analysis Center of Canada. It's Canada's financial intelligence unit and anti-money laundering and anti-terrorist financing supervisor. It was established in 2000 under the Proceeds of Crime Money Laundering Act to facilitate the detection and investigation of money laundering. And it uses established companies, or make sure that as you look at your supply chain, that you do use established companies in your supply chain. So if we talk about no goods shipped, there's no declaration to CBSA. What happens is money is exchanging from one account to the other, but there's actually no goods that were shipped. The one that I do want to focus on, but is the goods shipped, but unsure what is shipped. So there has been instances of bad actors using companies' business numbers or reusing paperwork that's been used previously and using other carriers' bond numbers to import the goods. The paperwork is set up for clearance and by the criminal, and the date of direct shipment might be changed, the PO number might be changed, but there's nothing really that stands out as different. You know, it looks like the same shipments coming in and it's getting ready to clear. So sometimes that's happening and maybe the importer doesn't realize that it's happening. So it's important that as an importer into Canada that you review your transactions to ensure that they are all legitimate transactions for shipments that you expected to come into Canada. So for example, if you have 100 shipments coming into Canada, making sure that you've got 100 shipments that were accounted for with CBSA. So the Proceeds of Crime, Money Laundering, Terrorist Financing Act, that is a mouthful, PCMLTFA. So what this is effective April 1st, so not long ago, the Proceeds of Crime, Money Laundering, and Terrorist Financing Reporting of Goods Regulations and amendments to the Proceeds of Crime, Money Laundering, and Terrorist Financing requires traders to declare whether the imported goods are proceeds of crime or are related to money laundering, terrorist financing, or sanctions evasion. Attest that the goods are in fact being imported or exported. Retain records already being maintained for customs and tax purposes, and truthfully answer questions related to the import or export of the goods when asked by the officer. The regulations also establish an administrative monetary penalty or AMPS penalty framework to promote the compliance with the Act. All right, so forced labor, indication of forced labor, which was developed by the International Labor Organization, withholding wages, deception, physical or sexual abuse, restriction on movement. So again, just making sure you're aware of your supply chain and that there are no indicators of forced labor happening in your supply chain. So the forced labor report is required to be completed May 31st, so not far away. The first one was required last year, and this is the second report. So who needs to submit a report is an entity, which would be any corporation, trust, or partnership, or other unincorporated organization that is listed on the stock exchange in Canada, or has a place of business in Canada, does business in Canada, or has assets in Canada, and that based on its consolidated financial statements meets at least two of the following three criteria for at least one of its two most recent financial years, has at least 20 million or more in assets, has generated at least 40 million or more in revenue, and employs an average of at least 250 employees. And those who fall within the above definition are required to submit a report only if they produce goods in Canada or elsewhere, import goods produced outside Canada or control another entity that produces or imports goods. All right, and now I'm going to talk about CARMS, CBSA Assessment and Revenue Management. So the biggest thing here is everyone knows CARM's been in effect since October 21st, 2024, and this applies to resident and non-resident importers. Just make sure that you've got 2 business account managers assigned to your account. So whoever's registered your company in CARM is the business account manager, but they need to assign someone else. And that person would be the second BAM in case the one BAM leaves or, ends up sick or anything like that. You need to have 2 assigned, because if you only have one and that person does leave, you actually have to contact CBSA and have them reinstate the account to a new business account manager. Log in regularly or your access will be lost. The commercial accounting documents are in CARM, so you'll need to download those, put them on your shared drive, so you have them for your record keeping purposes. The biggest thing that I want to highlight is if you don't have a means of security now, you need to have one by May the 20th. So it's really important you get your CARM bond or you put cash on account, whatever it might be, it needs to be set up by May 20th. Because if you have shipments coming into Canada after May 20th, they will not be clearing until a Type C entry is what it's called, but it's really a live entry where the goods aren't cleared until the duties and taxes are paid for each individual shipment. So please make sure that you have your bond and you're set up and ready to go for May 20th. So without proper security in place, your shipments will not be released and payment must be made before the release. And the drawback process, which we talked about in detail, it has changed. So if you're interested in doing a drawback, we can certainly walk you through that. Some of the late payment and interest, there is the customs now are charging late payment fees, so make sure that your payments are made on time. If there's an overdue balance, they're charging interest on that overdue balance, as well as if you have unpaid accounts, you're getting charged for that as well. So the payment policy, foreign banks have to be paid in Canadian currency. So there are some banks that allow payments to be made to the CBSA. So you can work with your bank if you haven't already done that and you can set it up a pre-authorized debit it's called, and that allows you to make the payments automatically on a monthly basis, and therefore you would not be late. You as an importer become liable for payments and all debts on the account. The billing cycle is harmonized. So essentially what that means is the monthly payment is due 10 weekdays, inclusive of holidays, after the 17th of any given month. Sometimes it does fall on a holiday and customs will push the date out, but that is very infrequent, and customs would put that information in CARM when you first log in, so you'd be aware of that. So some of the key takeaways from a overall standpoint. So assess your exposure to the tariff changes, understand how the surtax will affect your company, whether or not remission applies, and make sure that you can leverage other free trade agreements potentially. And review your product classifications and make sure that they are correct and the applicable tariffs that are applicable. And audit your declarations and payments to ensure they match your imports. We talked about that, but it does happen, so we need to make sure from your standpoint that they are correct. And guidance on the forced labor reporting, your report's due May 31st. You can actually go on there and see other reports that were submitted, but if that applies to you, the deadline is fast approaching. And maintain your release prior to payment. That's what RPP stands for. Make sure you've got your CARM bond in place by May the 20th. And if you have any questions, you can contact carminfo@ups.com.
Okay, thank you, Penny. A great update. I'd like to take a minute to thank both Carolyn and Penny for sharing some really important insights from their respective areas of expertise. I think it's really important and helpful, especially this time of year with everything that's going on. So thank you both very much. We had some questions in the Q&A, so thank you all for participating. Some of them have been answered. We're going to continue to answer those, but in the meantime, we have a few very commonly asked questions that we'd like to take live here. Penny, if you want to answer, this one's directed to you. What if I have applied for a CARM surety bond, but it will not be ready by May 20th, 25?
Ooh, that's not a good thing. If your bond's not ready, you still have to have some kinds of method of security. So it could be a cash on account. The cash on account will need to cover the duties and taxes for your shipments until the CARM bond is ready and approved. So it may be ready, but it takes a while to get approved. Once the bond is approved, you can go into CARM and request that the cash be returned to you. But certainly that situation, you still have to get some kind of security in place.
Okay, thank you. The next one is, what if we have been clearing goods into Canada without using CUSMA for the past couple of years and the goods are CUSMA goods?
Well, as long as you have a CUSMA certificate of origin, or you have the origin, you can, for that time period, then we could do corrections to get your duties refunded for the CUSMA.
Okay, perfect. The next one is, I have been paying surtax on goods, however, they are used for manufacturing. What do I need to do to have the surtaxes no longer be charged?
Well, I'll speak to what UPS SCS will do. So you'll need to provide a letter on your letterhead stating that the goods are used for manufacturing. Then we'll update the database to reflect it. So therefore, we'll put in the surtax code that's applicable to the manufacturing goods. And we are also able to claim the surtaxes back from the remission within 2 years of the date of importation. And CBSA have published that they will audit all the files. So please, if you are going to be exempt, make sure that it does apply to you and it is applicable to you.
Great, thank you. Next one, I'm not sure whether my goods would apply to receive a remission on the surtax. What can I do?
So you can email to the Department of Finance at remissions.fin.gc.ca. But really, if you just go to the Department of Finance website, you'll be able to see the email, because I know sometimes when you're not able to copy it down exactly how it's spelled, but go to the Department of Finance website and you can then submit an inquiry and they will get back to you. It won't be that quick necessarily, but they will get back to you. And like I said, we're able to claim the surtaxes back from the remission within 2 years after the date of importation. So that would be able to, we could still claim them back, even if it does take the Department of Finance a while to get back to you to answer that your goods would qualify and what exemption that they would qualify for.
Great. Last one. What happens if I have a shipment PARS accepted on May 18th and only crossing May 22nd?
So in that example, it's okay. The PARS is set up so it has been accepted, even though it's crossing after the date the bonds or the security goes into effect. However, if that same example, the goods, the PARS was sent on the 18th and it was rejected for whatever reason from customs, say on the 20th, and the importer of record did not have a bond in place. When we resubmitted the PARS that was rejected by CBSA, and there's no bond or no security in place, that will be rejected. So a type C entry will need to be completed, or the importer of record will need to put other means of security in place in order to get that shipment cleared, released prior to payment. Essentially, the release prior to payment allows the goods to continue to flow and clear without paying the duties and taxes up front. So if you don't have the security in place, then that means that the goods all have to be paid for before they actually get released from customs.
Okay, great. Thank you for all that wonderful information, Penny. We appreciate it. That actually concludes today's webinar. If there are any further questions, please don't hesitate to get in touch with us through the contact information on the slide, or we will have that post-event survey that you could drop your questions in there and we can get back with you. Once again, we appreciate your trust in UPS and we hope you have a wonderful rest of your day. Thank you.